Welcome back to the Video CPA. Today we're going to be talking about business versus hobby. So far in this series we've talked about income for social media type pursuits, which really applies to any type of business you might have. And we've talked about expenses for social media pursuits, and which also applies to any business that you might be interested in starting. So as we start today, you see the disclaimers, our disclaimer for education, our disclaimer for affiliate links. So let's go ahead and get into the main part of the subject. So you can see that on the first slide of this topic, we have 26 CFR 1-183-2. These are regulations in the law that actually affect the deductibility of expenses. And basically what this page is saying is that no deductions are going to be allowed for expenses if they're related to hobbies or if they're related to sports activities. Things have got to be undertaken as a business before any expenses are going to be deductible. Part B of the regulation then goes on and it starts talking about how you determine whether an activity is engaged in for profit or not. And so it basically says that the IRS will come in and they will consider all the facts and circumstances before they make a decision, and you should be doing that as well. So it lists a number of factors that they come up with, and there's 9 of them that they come up with that will help you judge whether you've got a business or not, because those are the factors that the IRS will be looking at if you're audited. And the first factor to be looked at in whether engagement is carried on for profit or not is the manner in which the taxpayer carries on the activity. Now, in the previous slide, it talks about these 9 factors, and it said that no single factor is more important than the other factors in determining whether a business is engaged in for profit or not. So, but I would say from experience that this is a very important one. I mean, you have to carry on the activity in a business manner, which means you need to keep good records. You need to be professional about what you're doing. Maintaining a separate business bank account is also evidence that you are running a business, so I recommend that highly. And once you've got that separate bank account, you should not commingle personal and business funds. You should use that business account just for business and not run personal items through it. You should have a business plan for at least 5 years, I would think. You should have a budget. You should produce financial statements and review those financial statements in relation to a budget. And if you've been in business a couple of years and business has resulted in a loss, you should be making adjustments that will show an effort to improve profitability so that you don't continue making losses every year. Next question. Do you or your advisors have expertise in the business or the activity that you're pursuing? If you're a doctor, for example, and have no expertise in horses or raising horses, and you want to raise European warm blood horses, for example, to do dressage or to do jumping, you either need to know about that activity or you need to hire people that do, because if neither of those are present, you're probably going to be judged as a hobby if you are ever audited anyway. Factor number 3, do you spend your time and effort working in the activity? Now, if your wife's got a $1 billion trust fund and you tinker around in your wood shop maybe 2 or 3 hours a day, and the only thing you've ever made in the last 10 years is furniture for your own home, and you've written everything off, that's probably not going to work. But so the time you spend in the activity does make a difference. If you have a full-time job, for example, and you're doing this on the side, the IRS will look at that as a possibility. If you quit your job and you're working full-time in this activity, that would denote that this probably is a business and that you're trying to make a profit. But the time you spend carrying on the activity is is a factor that the IRS will look at. So you need to look at that as well. And if you're just tinkering around or something, it's probably a hobby and not a business. So make sure if this is going to be a business, you're spending time. And it doesn't have to be actual time in producing the product or whatever, but it has to be time producing the product and keeping the books and going to the store possibly and hiring employees and collecting receivables and all that sort of thing. So keep that in mind when you're looking at how much time you spend in the business. Do you expect that if you have assets in the business that those assets are going to appreciate in value? Now, if you've got a normal business with equipment and stuff, most of that equipment is going to depreciate in value over time. So this really applies to people that are in business with real estate probably, maybe rare coins, things that appreciate in value. So the reason this is here is because even though you may not make a profit every year or something, when you sell those things, you may have a huge gain, and so you'll make your income from the sale of those items at some point in time in your business. Factor number 5, have you been successful in carrying on other similar or dissimilar activities? That basically means if you've been in business before, have you made a profit? That would be the successful part of it. If you've been in 5 businesses in the past and every one has resulted in a loss, the IRS is not going to look at this activity very charitably, I would think. But if you've been in business for several times before and you've made profit, maybe 3 out of 4 of those businesses or even half of those businesses, the IRS will look at that and they will say, well, possibly this is a business. We have to look at other activities. All right, has your business been profitable in the past? If you have a horse operation, for example, and all you do is feed those horses and shelter them, and there's no training involved or anything like that, then probably you just got a hobby raising horses. So if you're trying to make that a business, you've got to do a little bit more and hire a trainer or something. And if you've written off losses for 10 years, if you're audited, the IRS is not going to look at that very charitably either. If you've had some years where you've made profits and some years where you've made losses, that looks much more like you're trying to make a profit. There isn't a hard, fast rule as to how many years you have to make a profit out of a certain number of years. But you do need to show that you've got a profitable history to some extent and that you're trying to make a profit and you're making adjustments so that you can make a profit. And you need to be able to illustrate that. So keep that in mind if you've had losses for a couple of years. At least try to illustrate that you're making changes. You're trying to improve your business so that you can actually make a profit in the future. Factor 7, the amount of any occasional profits earned. Let me give you an example of that. If you've been in business for 10 years and you've constantly lost money 8 of those years in excess of $20,000, for example, and then in 2 years you show a tiny profit of maybe $100 or $500, the IRS may question that and say, hey, you're just working the system here and trying to show a profit, so we'll stay off your back, but you really don't have any intent to make money at this activity. You're just trying to write off all your expenses against the income that you have. That's not going to work. Factor number 8 is your financial status. If you're running an activity and it's the only means of support that you have, and you're just struggling to make ends meet, or even if you're not, that is one thing the IRS will look at in determining whether this is a business for profit or not, or an activity for profit. On the other hand, if you've got that $1 million trust fund and you've got your woodworking business or your social media business on the side, and you're only messing with it a couple hours a day and you don't need the money, and showing losses continually, the IRS will certainly question something like that if you are audited. It doesn't really need to be $1 million in a trust fund if you're supported by a spouse or If you're making work at a full-time job and you're making, say, $50,000 a year, and you're a social media warrior that gets on maybe a day or two each evening, and you make one YouTube video and post it maybe every 3 or 4 months, that's probably not going to indicate that you're in this for profit. One, you're not posting enough, and the other, you've got other means of support that will keep you paying the bills. So keep that in mind as well. Factor number 9, and let me emphasize here that although this is the last factor that is mentioned in the code, it's not necessarily the only factors. These 9 factors are not necessarily the only factors that the IRS will consider. They can consider anything else that they want. But let's talk about this then. Is the activity that you're engaged in, are there elements of pleasure or recreation in the activity? For example, suppose that you own a fishing boat, and a commercial fishing boat, and you're supposed to charter, for example, fishing trips for clients. And the only thing that you ever do is take your family fishing and maybe some friends, and you charge them, either charge them nothing or you charge them a very low rate. The IRS is not going to look at that very favorably. But if you, for example, have records of who you've taken out, when you took them out, and how many charters that you've had in a given season, that's evidence that you've engaged in this for a profit, especially if they've paid you a reasonable and fair pay for what other people are getting in the area. So elements of pleasure doesn't necessarily mean it's not a business, but it can certainly point to the fact that it's not a business if you're not acting like a business. In conclusion, I would certainly recommend that you treat yourself as a business if you feel like you're in it for profit. I don't want to scare you here with any of these things, but if you honestly feel like you're engaged in it for profit and you're trying to make money, treat it as a business. But make sure you're looking at these 9 factors, and especially factor number 1. I think that's very important to keep records and make sure that you're acting professionally, you're conducting yourself as a business, and then I don't think you'll have any problems. But if you are a business, that business is reported on Schedule C of the 1040. So Schedule C is actually an addendum to your 1040 form, and it's specifically made for sole proprietorships. Now, if you're a corporation or a partnership, there's other business forms that you'll have to file, but Schedule C, if you're a proprietorship, will be the schedule that needs to be filed. If you wish to be a hobby, you'll report your income on the front of 1040, and actually there is a schedule for other income now, but it'll be reported on line 7A of the 1040. There's no expenses anymore that can be written off against it. Prior to last year, you could write off your expenses to some degree, but now there's nothing that can be written off if you're treated as a hobby. So there isn't really a lot of, there's no tax advantage to be treated as a hobby anymore. And so I think the effect of that is that more and more people are going to treat their activities as a business instead of a hobby. And if that's the case, you'll probably see more IRS audits in this area. And so that's another reason to make sure that you're looking carefully at how the IRS is going to look at your business if you are audited. Well, that's it. If you have any questions, put them in the comment section. If you like the channel, like it and subscribe, and appreciate your time. Thank you very much.